And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome back. It's time for the market forecast for Monday, November the 28th. My name is John. Thanks for trusting me with your time. I hope that you had a nice, long Thanksgiving weekend. Had a lot of fun with friends and loved ones. I know I got a few things done around the house. We've started the process of Christmasification in the house. We're not quite finished yet, but we'll be done by December the 1st, I'm sure. Again, hopefully you had a nice weekend. I feel like it's been a month since the last time we got to sit down together, and something I always look forward to and give thanks for. So, as usual, our focus here is on accurate context, risk management, and always remaining patient in our trading. And I know I'm going to try and remain patient today, as we don't have a lot of important nuances or ruling reasons for most of these trades and in these markets today. So let's focus on economic numbers at the beginning here. And we don't really have anything all that important this morning. The Dallas Fed Manufacturing Survey is due out at 9:30 Central, but that's just about it. We do have one talking Fed. John Williams, I guess, is due to speak today. Actually, two. Bullard and Williams are both due to speak at 11 a.m. Central today. But as the week goes on, things get a little bit more important. Tomorrow we have the Case-Shiller Home Price Index, FHFA Home Price Indexes, Consumer Confidence tomorrow at 9 a.m. All of those 8 o'clock are the home numbers. 9 o'clock is the Consumer Confidence number. Wednesday, ADP employment report, lots of important information as far as the employment situation this week. We do have the second estimate for the third quarter GDP coming out on Wednesday. International trade in goods, corporate profits. We have Powell speaking at 12:30 on Wednesday. I know everybody will be making sure they're paying attention to that. We also have the Beige Book on Wednesday, as well as the usual EIA petroleum status report on Wednesday. Not seeing it on there it is, 9:30 on Wednesday, of course. Thursday, jobless claims, personal income and outlays, ISM manufacturing index. That's going to be one that many people are going to be paying attention to. And then the employment situation, I guess they call it now. We always used to call it unemployment, and we used to also say it was unenjoyment. So we got a lot of important information due out this week. So we're going to take our time getting involved in these markets this week and make sure we are looking for good opportunities. We don't want any turkeys. We all had our turkey last week, so no turkeys this week. As far as the way things are shaping up this morning, U.S. stocks are set to open lower after the long holiday weekend. A lot of folks blaming it largely on expanding protests of China's strict COVID lockdowns and the effect that that's going to have on the world's second largest economy. Crude prices also to the downside this morning on largely the same reason. Questionable Chinese demand, and it continues to be in question. The VIX is up this morning, obviously, about 8%, 22.12. Still not a large number, but a pretty good jump in VIX this morning as far as the percentage-wise. Dollar index off slightly at 105.71, and the yield on the 10-year also off slightly at 3.67%. Last I checked. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Forecast and everything we do here. As also, you can get notifications if you subscribe to our YouTube channel for any time we do go live. Today on the schedule at 12:30 p.m. Central, we have group coaching. If you have questions already in mind, you can email me those questions at jhoagland, JHOAGLAND, @topstep.com. If you have any other suggestions or feedback for me, you can also send it there. I always tell everyone, if you like what you see, tell everyone. If you something you don't like, tell me. And then after that, we have the Make Hogue Money. Good week last week. Had a couple of good winners, so a good week out next week. I'm sure we'll be looking forward to some good opportunities this week in Make Hogue Money. Look forward to seeing you there. Bring your knowledgeable trader, because these are your ideas and you're going to be making me money. So looking forward to that. And then, of course, the recap at the end of the day. Good morning to everyone. I got Nasdaq first in the room. You win the prize. Shortly thereafter, the Rooster. Good morning. Hope you had a nice holiday weekend. And yes, it is time to get back to work. Terry King, good morning. Shaw Cunningham. Theo, good morning. Stephen, Jimmy Decker, George Duque, good morning. Dimitar, good to see you. Sonny with a quote already this morning, and I really do like this quote, Sonny. Good morning, everyone. Here is a quote for the day. Our greatest weakness lies in giving up. The most certain way to succeed is always to try just one more time. And that's a quote from Thomas Alva Edison. Good quote for us this morning. Good inspiration. Sonny, thank you very much. Bill, Caesar, Dan Trader, good morning. Scott Saw, and he conquered. ZK, Caprice, good morning. Joel, Vince, my guy, good to see you this morning. JD, Dark Kevin, Glitter Sandwich, good morning. Hope everyone had a wonderful holiday, and we do, of course, hope that for everyone as well. Good morning, gents, from JD, Dr. VJ, Jules, Eric Hill, good morning. Three Lions, Rusty Golfer, Joe, good morning. Sarah Hall, prayers and love to you as well. Jan, good morning. Dowitzer, Serenity Trader, Hegel Matters, good morning to you. Joe Drennan, Hypo, weak response trade to upside where look for exhaustion for short. So Joe is looking for opportunities to sell strength, it sounds like this morning. Large, low volume node, 40.30 to 40.80 from the high of the year, where I will look to short. Thank you, Joe. That is a great quote, Sonny, right? Alejandro, good morning. GAD, sounds like a busy week. Yeah, there's going to be some important information due out this week. I think I mentioned last week that because the minutes were out, it was 2 weeks to the FOMC meeting. It was 3 weeks to the FOMC meeting. It's 2 weeks after the Beige Book, which is due out on Wednesday. So 2 more weeks before the FOMC meeting. Scarlet Arachnid, JD, good morning. Do we think Meta 277 fine will affect the NQZ today? I don't know. We'll have to see. It seems as though it may be affecting things already. George Duque, George, Lacey's on her bed right now, just snoozing. She had a very busy weekend with a lot of visitors. She was up late all 4 nights, and she seems pretty pooped right now. She's just snoring away over there. Jason, she's got the life, doesn't she? Patrick, good morning. JM, Philip, Swapnil, good morning. And Anissa, it's a pleasure to see everyone as always this morning. So we're going to take a look at the charts here just very shortly. Don't forget, we do have group coaching today and Make Hogue Money before we get to the recap at the end of the day. Hey, my brother, Rick, it's good to see you. I love you. Any thoughts on the overnight inventory being too short for a potential long at the U.S. Open back to overnight opening range? We're going to take a look at that, Achilles, and I'm assuming you're talking about the equities. We'll take a look. Yeah, we do have Bullard this morning at 10 a.m. and John Williams also due to speak at 11 a.m. Central, both of them 11 a.m. Central. Zerain, good morning. All right, let's jump in and start with the daily in the S&Ps. So just miserable volume, of course, Thursday and Friday, so no real important information coming from that, although we did on Friday between both days, add 6,600 in open interest in the December contract here in the S&P. So I find that a little bit interesting. We put in our weekly high on Thursday, which was just a very low volume day. The medium time frame structure to the upside still remains intact. We're putting in higher lows. We're putting in higher highs, barely, last week. But still, the structure to the upside remains. We're looking at somewhat of a pullback now. We are looking at a lot of important economic information this week. And I'm going to kind of go ahead and say that where the market is now is essentially located in last week's range. It seems as though the market is thirsty for new data, and it's going to get some of that data this week. Trying to seek out the reasons why the market is presenting so weak this morning is difficult, and is this all because of the protests in China, like many people are talking about, or is there something else going on here? Take a look at the 30. Here's the last week, Thursday, Friday. So are we going to be seeing an overnight inventory adjustment? We opened the session last night right about here. We are currently right about here. There is a distinct possibility of an inventory adjustment. We did adjust inventory early in the London session here, but I think we've started to accumulate some more shorts, and it already seems that they're somewhat reconciling those shorts as we speak. So I think it's important to remember, Achilles, when we're looking at overnight inventory, we're not starting at settlement. We're starting at where the overnight began. So if we're looking at settlement, it looks like a much deeper overnight inventory than may actually be present. There's lots of different levels down below with which to return to and check and revisit. We got a couple of naked points of control below. We've got a couple of naked points of control above. I think this market is just searching for information, and it's probably not going to get anything other than the Fed speak today at 11 a.m. Central. So thinking about what these markets do and how short of a memory traders have, and with the medium time frame longer look, it still has me looking for opportunities to buy weakness. Now, we're going to be opening with a gap. We open with a gap. The rule is if we can't close the gap relatively early, we look for opportunities in the direction of the gap, which is currently giving me cognitive dissonance. What I'm seeing isn't lining up with what I'm thinking. So that's going to tell me that I need to stay patient. The market's going to be opening with a gap. There may be an early opportunity for us today, but I'm probably going to just be patient and wait for the opportunities that come throughout the day, throughout the session, because I'm not seeing too many important nuances or ruling reasons for me to get into a trade that early today. Now, that's just me. Now we have Joe looking at a low volume node from the beginning of the year between 40.30 and 40.80. It's a big area. But if we do get up to these levels, we've seen resistance up here already. It seems to make sense that there may be some good opportunity there. But again, that's a long ways away. 40.30 is the low end of that low volume node that Joe is talking about. That takes us back to Friday's range. How about Friday's point of control? How about Thursday's point of control as potential for targets as well as executions? I don't know. I'm going to be staying really patient today. It's been 4 days. I got to get my bearings. I got to get my feet on the floor. I got to get, my sea legs back, if you will, before I'm going to try and get too involved in much here. So now we've got crude oil moving towards yearly lows. I mean, here's the beginning of the year. Okay, here's where we started the beginning of the year. We've taken almost all of the gains from earlier this year back. We're already opening below a weekly kickoff level that has remained for a little while. That's 475.20, which was our measured move from this head and shoulders, took us right there last week. Now we've broken out and are going to be opening with a gap through that level. That tells me if we can't close this gap, my next area of potential support or continuation is going to be all the way down at 69.60. That's the next weekly kickoff level because we've kind of broken out below this week's. If we do continue, that's the target that I'm looking for. Now remember, these weekly kickoff levels are not meant to be envelopes of range, anything like that. They are areas that I'm suspecting longer time frame traders will need to adjust inventory. We've just moved past one. So what we're looking for today is for the longer time frame traders to need to adjust inventory, whether it's getting out of longs or increasing shorts is what I'm really paying attention to below this weekly kickoff low. Open interest has been moot for the last two sessions. Both of these sessions are considered the same session by the CME. We only added 700 in open interest, which is largely inert. Well, we opened here, right up here. We established some overnight inventory to the short side, but all of this consolidation is likely going to go a pretty far way to even that inventory that has been accumulated throughout the day. So we're opening below. We've got an area of balance with which to really kind of focus. I'm thinking might be a good opportunity for us because we've got a balance extreme here that is obvious. We have an obvious balance extreme down here. We fade those extremes until proven wrong. If we accept outside this area of balance in a very short time frame, the market could continue in the direction. So I'll be hawking to see if we take out the overnight low with any volume or momentum for continuation to the downside. We are opening with a gap. Gap rules. All right. Seeing now from Caesar, Chevron has been authorized to pump more oil out of Venezuela. Something wrong with our oil? Right? All right, now to the Nasdaq. The Nasdaq is more balanced than the S&Ps. Okay, yeah, we've got a couple of higher highs, but it's not the same kind of look. This is a different market, and it is its own thing. So look at where we are here. We're inside last week's last week's high and last week's low. Relatively good established extremes for the market that is in balance. We have the weekly kickoff low tested last night and finding, at least for now, some support there. Market's not open in regular trading hours yet, but that extended trading hours test down there is an initial rejection of price at that level. Losing 1,300 in open interest over the last couple of sessions. Maybe we took out some longs here on Friday, which still is very low volume, but better than Thursday. Here's the 30-minute chart. Let me bring this back here. So points of control, a go-go above. We're right at this point of control. We're probably going to finish that one, the check of that one today. Weekly kickoff low, supportive overnight inventory, shortish, or is it? Not that big of a price move. We've got the gap from the weekend. We've got the gap from Friday. So we can't close that gap relatively early. We're looking for opportunities to get another test of weekly kickoff low. That could be another interesting area for an execution, but in either direction. If we fail to hold it and we build volume below it, spend some time, because time is what really marks acceptance, and that would be acceptance of lower pricing. We would see this market continue to move to the downside. So, patience. Again, I've got that same kind of cognitive dissonance because I want to see the Nasdaq and the S&Ps turn around and head back to the upside. Am I seeing the nuances? I'm not seeing a lot of nuance that gives me enough of a ruling reason to get involved too early today. Just the fact that we've opened with a gap today, to me, isn't enough. Gold. Whoops. Last week's high. 1, 2, 3, 4, 5. Okay. 1, 2, 3, 4, 5. Okay. So, gold is in rollover, for those of you that weren't aware of that. We're going to be rolling to the February contract, and the volume was, got to tell you, pretty close today. I can tell you right now that the December volume, 77,300, the February volume, 66,700. So very even as far as volume is concerned. Tomorrow morning, if we see that the volume is greater in the February contract, we're going to change to the February contract. But for now, we're still trading the December contract, which has found central location inside weekly kickoff levels and is largely in a short time frame balance here that may be directly related to the rollover. We know that rollover creates the opportunity for longer time frame traders to move their positions into future months, and it takes their focus away from directional activity and pushes them towards trying to get a cheap rollover, which then their focus becomes that, and it's much less likely for the market to become directional, which again does not mean that it can't. Anything can happen. So we've got weekly kickoff levels are the real extremes here. I mean, we tested to the weekly kickoff high 2 weeks ago, the weekly kickoff low last week, and we're right in the middle. Our little tennis player is just waiting for the next volley. Last week's high was in play in the overnight. It should be still remain to be in play today. Last week's low is basically weekly kickoff low. Well, we got a ways before we see that. So again, we're going to try and stay patient. We had overnight inventory. Where do we open? We opened right here. Right here. We are currently trading here. We got too short. We got too long. We're back in range. We're back in value. We have no overnight inventory. Nobody, no runs, no hits. Nobody left on base. And it's the beginning of a new ball game here. So we're right in the middle of value from Friday. Point of control is right there. Right where we're at. The fairest price from Friday. In rollover. Stay patient in this market today, my good friends. Stay patient. This is going to be a sit and wait and see if something happens, and if I can catch it in a cheap way, I'm fine with that. But if I miss it, I have to be okay with that too. Euro. So the euro is testing weekly kickoff high. We've got a potential breakout. Earlier this morning, we were hanging out up here. Again, we've got the regular trading hours seemingly struggling above that level. Added 2,400 in open interest on Thursday and Friday together. Volume was actually pretty decent in the euro over the holiday weekend. Of course, you know, they don't really celebrate Thanksgiving anywhere else but the U.S. So the European traders still were involved here in the euro. So we've got a pretty important level to deal with today, and that's the weekly kickoff high. That level is 104.65, 104.65. Here's the 30. Overnight inventory still remains, I believe, to the long side, and we've got our weekly kickoff level here, kind of magnetic for the last three 30-minute bars. It started there, it ended there, it started there. Where are we going from here? This is a difficult situation. We can't close the gap. We're going to look for opportunities for this market to continue this breakout above this level. Of course, we're going to need to watch the dollar. The dollar is going to be of ultimate importance, of course, to the euro. If we continue to see the dollar weak, euro is probably going to find more time to accept above this important inflection level, and we'll see. May see this market continue to the upside, but again, I'm going to stay patient. I mean, this weekly kickoff level does offer opportunity to limit risk. I'm looking for a little bit more of a nuance or ruling reason before getting involved. Alrighty. The yield on the 10-year keeps kind of slipping, but the market is having trouble getting above an important inflection level, and that is the weekly kickoff high, which is 113 and 15/32. Got past it a couple of ticks in the overnight, but seems to be struggling now. We added 14,000 or 40,000 in open interest over the last two sessions, the holiday sessions. We added some pretty decent open interest. I'm kind of surprised by that. So what are they doing? Well, we did nothing here on Thursday. If we added open interest, I'm going to go with it's probably to the long side. We've got a high target area or target rich area up here with weekly kickoff on naked point of control, and last week's high right in the same area, right in that same spot. So the market looked above it prior to the open. Overnight inventory has now been adjusted. The market's moved back into range, back into value, brings the opportunity for price to possibly return back to low of value from Friday. I really feel like I'm going to just watch for a little while and make something come to me. Because of 4 days off, I'm just getting my feet wet here, just getting an idea of, what I'm thinking, what's going on, what I'm thinking for the week. The last thing I want to do is start off like a turkey, and so I'm going to be patient. Here's the natural gas. Open interest, we lost 3,300 over the last couple of sessions, maybe a little bit of long liquidation there. Are we falling into some short time frame control is my question. As we lose open interest, are some of the longer time frame traders just sitting pat, or are they just going to be holding where they're at for a little while? Here's the 30-minute chart. So we do have, to a degree, some overnight inventory. Again, this area of balance down here can do a lot to even out that inventory without bringing price all the way back up to that level. We've got a gap. We're trading, we've got gap rules. We can't close this gap. The opportunity may be to the downside. There's lots of visuals on both sides of the market. We're sitting here in the middle. Yes, we've opened out of balance from Friday's session. Yes, we do have a gap. Yes, better trade locations may happen early in this session, or they may not. Remember, nothing is finite in futures trading. And anything absolutely can happen. Caesar, I guess Mrs. Lagarde is speaking, so watch the euro. Thanks for chiming in and letting us know about that. So it is a long week. There is a boatload of opportunity this week. Don't feel as though you have to catch everything. I'm remaining patient here on a Monday. We've got Make Hogue Money at 1 p.m. Central, so that may be the beginning of my trading week. I don't know. Again, I am sensing cognitive dissonance in a lot of these markets, and not a lot of nuances are really sticking out as more important than any other nuance that I'm seeing. So that's telling me, let's just back off a little bit, stay patient, and look for better opportunities as the day goes on. All right, let's take our deep breath. Stay humble, grateful, and creative in your trading today. I know I'm going to be staying humble and patient today and creative. I just don't see what beautiful piece of artwork I'm going to be able to make out of these markets today just yet. So be cool, calm, collected, and centered. I'll see you in the proverbial trading pit here in just a few minutes. Don't forget about Make Hogue Money and group coaching today. And if I don't see you then, maybe I'll see you for the recap at 3 o'clock today. So 3:15 today. We do have Make Hogue Money until 3. So, all right. Have a great day, everyone. Thanks for your contributions to the market forecast this morning. Blessings to you all. Trade well, and I'll see you on the profitable side. Have a great day.